So our next question comes from Christina C. Christina says, "Hi, Robert and Austin. I absolutely love listening to your podcast. Thank you both for all you do. I'm 29 years old. I live at home with my parents in New York, so I don't have to pay a mortgage or pay rent. I earn $94,000 a year. I've got $14,000 in student loans at 4.3% interest, a $19,000 car loan at a 7.5% interest rate, and both of these monthly payments come out to about $170 and $380 respectively. Thanks to your advice, I've opened up a Roth IRA in 2023 and I maxed it out every single year. I have $109,000 in my Roth 401k, $76,000 in my bridge account, and $77,000 in a high yield savings account. However, I feel like I could be doing more with my money and I want to take my wealth building to the next level. What would you both do if you were in my situation? Thanks so much." What an interesting situation to be in. Robert, do you want to kick this one off?
Yeah, this is just an incredible situation, especially at 29 years old. And I think Christina is spot on. I think there's too much money in the high yield savings account. I think that's going to underperform dramatically. And I would only have maybe 25 or 30,000 in there and get the rest invested. I'd probably add that into the traditional brokerage account because you already have the Roth maxed out each year. That's what I would do. And I would also start looking at maybe some diversification. Now that you've got your base built and you're doing really well, maybe add some individual stocks in there, maybe a small portion, 5% of your net investable capital into some cryptocurrencies like Bitcoin, XRP, Chainlink, stuff like that, and really just get more diversification, but also do exactly what you're thinking, Christina, and that is get the money working harder for you. Because right now, having 77,000 in a high yield savings, I applaud you because it is making probably 4%, which is better than most people because so many people just let it sit in a checking account. I think it's amazing, but I think it's too much money sitting in that account. So I would move 30, 40,000 of that out, get it into the traditional brokerage account, maybe get a public.com account opened up so you can start buying the cryptocurrencies we're talking about. And I think you'd be good to go there and in a much better position in the coming months.
I agree with that, assuming that that 77,000 isn't already earmarked for some sort of down payment on a real estate purchase. I feel like, Christina, you are primed to house hack. You're 29 years old, which means time to move out, right? No need to still live with the parents here. You're almost 30, right? Let's go move on and start our lives and really begin to be that independent person. And I think the best way for you to do that now is to start house hacking. Robert and I always talk about the 5% down Fannie Mae, which means to buy a duplex, triplex, or quadplex up to it's like 1.3 million.
1.3 million, yep.
And all you have to do is put 5% down. They lend you the money and you now live in one of the units, rent out the others, and you're rocking and rolling. So you could use part of this $77,000 that's in your high yield savings account to go buy a duplex or a quadplex. And I would house hack that. I would live in one of the units and then have someone else rent out the other unit or other 3 units, depending on how big of a multifamily that you bought. And then make sure that you don't forget that house hacking is not always a situation where people completely pay for your mortgage, but it could be a situation where it brings down your living expenses dramatically. So by house hacking, sure, we would love for our tenants, quote unquote, to completely offset and pay for our mortgage. But even if it means that they don't, but instead of a mortgage of $2,300, we're only paying $1,800 or $1,100 because they are supplementing some of that with some rental income, that is a great situation to be in as well. I love what you've got here going on with the Roth 401k, the traditional brokerage account, and this big beefy high yield savings account. I truly think the next move to make is go house hack. You're old enough to go start your own sort of independent life here, and house hacking at your age is a wonderful idea.
I love it and couldn't agree more with that answer. Great take.